I think it's probably pretty par for the course. I mean, this seems to be happening with every IPO. There's froth that pops, it falls down again. I mean, I think the expectations are so absurdly sky high, and Coinbase is kind of responsible for that by putting out those first quarter earnings right before going public. And so I think the appetite and the froth is ridiculous. But I think the where it settled is about where I think a lot of people would have predicted.
I would love that as a headline, absurdly sky high. There was a guest on with Brian Sawsey early this morning who said that, look, Coinbase may be something right now, but they face competition that'll make them yesterday's news. I mean, what's to prevent, a Goldman or someone else opening up an exchange to compete?
Yeah, the bears are throwing that around a lot. And there's something to it. I mean, I think it's kind of worrying that 94% of their profit, or I think maybe revenue, is from trading commissions. I mean, that's not sustainable, especially since we've seen, commissions and trading become sort of a commodity in other fields and equities. But I think people underestimate how long the runway is. I mean, this stuff is harder to do. It's harder to stand up a full-blown crypto exchange than it is to, sort of set up a stock trading platform. So, and in the meantime, I think they'll, they're developing their other revenue streams to custody and all the rest of it. They're going to dabble in NFTs, I think, and longer term, I think the end game is one day they're anticipating every stock will trade as a token, like Walmart stock will trade on a blockchain. Question, is that going to be like in 2 years or 5 years or 10 years? And that's, I think, where they want to be. But you're right. I think they're in a race against time to show they're more than a one-trick pony.
Jeff, you've profiled Coinbase. What can you tell us just about the company's culture there during, I guess, what you learned while writing the book?
They're interesting. I mean, companies are defined a lot by their CEOs. I mean, Facebook is Mark Zuckerberg, Amazon is Jeff Bezos, and Brian Armstrong is just a very odd dude. He does not like press. He does not like the limelight. He's incredibly introverted, which is sort of unusual. And I think his judgment has been suspect a few times, like the thing the Times reported on, putting out that letter saying, you have issues with politics, don't work here in the middle of Black Lives Matter. That was a pretty unforced error. Picking fights with the New York Times, not a good idea. But that said, I think people underestimate him. You don't get to be, the CEO of a company that goes public at $100 million for $100 billion, if if you don't know what you're doing. So it's an introverted culture. It's a workaholic culture. And I think they do, like the rest of crypto and finance generally, struggle with diversity and to try to translate how their products, can be inclusive to more people than a bunch of like white and Asian dudes in their 20s and 30s.
I want to flip the question I asked you around. So, because it was based on that Sawsey interview this morning, but what's to prevent Coinbase from expanding and being a threat to already established exchanges or platforms that might want to go in this direction?
That's a terrific question. And I mean, I think you're right. I think it's Coinbase's to lose. And their infrastructure, if you look at like the next era of stock trading and markets is being defined by blockchain, I mean, they're in a pole position. So, barring major screw ups, or regulatory trouble, I think they're in a good place. One weakness, though, they have is they don't have clout in DC. I mean, the banks are all very good at protecting their turf, protecting their interests. And just like Silicon Valley 10 years ago, we're kind of above the political fray. That's where the crypto industry is now. And I can also see sort of some of the incumbents, doing dirty tricks in Washington to kind of try and kneecap Coinbase and other crypto players.
So Jeff, right now, crypto market cap, it topped out just over $2 trillion. What's the size of the opportunity in this space? Are we just scratching the surface?
I think in the long term, yeah. I mean, I think there's the saying I like in tech that people overestimate the short-term impact of technology and underestimate the long term. That was the case with the internet, like in the late 90s. And I think that is with crypto right now. A lot of what we're seeing right now has to be a bubble. I mean, these prices like Dogecoin, Litecoin. What's the point of Litecoin? Why is it worth that? So a lot of this stuff is just kind of dumb money sloshing around. And as in 2017, I think we're due for a pop, or a pop of the bubble, I should say. But in the longer term, I think this will prevail.
My computer froze. I apologize. I'm cheering what you're saying because you're speaking so directly about when you call this a bubble. I'm not sure if crypto is a bubble, but things like NFT, that's where the money is. But where's the value? I mean, a digital image that I can replicate 1,000 times at no expense with no licensing, what good is that to anybody?
That's above my pay grade. I mean, I'm not an art critic. I agree with you. I think there's that cartoon going around. Everyone's listening to a song. There's some nerd in the corner going, don't they know I own the NFT to this? So I think, but I don't think it's going to go away. NFTs aren't brand new. They've been around since like 2016, and I think there's a there. But again, the bubble's going to pop. There'll probably be, a lot of it's going to be garbage. It's never worth anything. But then certain specific stuff, maybe sports memorabilia, maybe art, something is going to have some lasting value, is my prediction. But in the short term, I think a bunch of people are going to take a beating.
Jeff John Roberts, executive editor of Decrypt, thank you so much for taking the time to join us here in Yahoo Finance. And we look forward to hopefully having you back here again soon.